If you look at a traditional company's balance sheet, there's almost a sort of gravity to it, right?
Yeah. Money comes in, money goes out.
Exactly. You sell a physical product, you record the revenue, and the accountants point to the bottom line to show everyone that, you have a real business.
Yeah, the physics of normal finance.
Right. But if you step into the artificial intelligence sector today, that gravity it completely turns off.
Mm-hmm.
To justify its existence right now, a company like Anthropic is essentially asking Wall Street to look at a calendar, skip ahead to 2028, and, hallucinate $200 billion in revenue.
Which is wild. I mean, we are witnessing a complete suspension of traditional financial physics.
Totally.
Tech giants are undertaking these extreme, almost desperate maneuvers to secure their footing, mostly because the ground underneath the AI industry is just shifting daily.
Yeah, and if you are listening to this deep dive and you're holding tech stocks right now, or, if you just work anywhere near the software industry, you have probably felt the whiplash of this massive spending.
Oh, without a doubt.
So, our mission today is to figure out what's really going on. We are looking at a stack of freshly leaked financials and strategic reports to uncover the actual mechanisms driving this market. We're going to look at Anthropic's eye-watering IPO valuation strategy.
Which is a whole situation in itself.
Right. And then Apple's unprecedented, highly sensitive AI integration in China. And finally, NVIDIA's multi-billion-dollar effort to literally alter the physical power grid out in Ohio.
And, the common thread running through all three of these moves is just the sheer brutal cost of playing this game. It forces startups to invent entirely new financial models.
Yeah.
And it forces these established legacy giants to completely abandon their usual playbook.
Okay, let's unpack this because I want to start with Anthropic. Their upcoming initial public offering provides just a perfect window into the financial acrobatics happening behind closed doors right now.
Acrobatics is a good word for it.
Right. To justify a massive valuation for this IPO, Anthropic isn't even talking about what they earn today. Instead, they're projecting their revenues out to 2028, estimating a target between $190 billion and $200 billion.
Which, and this is key, requires investors to take a massive leap of faith regarding their growth trajectory.
Huge leap.
Right. Because to understand how steep that climb is, you have to look at their current baseline. Back in May, their revenue run rate, which basically projects their current monthly pace of business over a full year, that was reported at just $47 billion.
So wait, they are asking bankers to underwrite a jump from a $47 billion pace to $200 billion in what, roughly 2 to 4 years?
Yeah, pretty much.
For the listener who doesn't live and breathe Wall Street terminology every day, how does a banker even model that? Like, how do you price a stock today based on a reality that is essentially science fiction?
Well, they rely on a metric called the enterprise value to revenue multiple. Normally, investors would look at a company's past year of revenue, apply a multiplier based on the industry standard, and, arrive at a valuation. But because Anthropic's current revenue is just a fraction of its projected future scale, bankers are using forward-looking multiples.
Meaning they are looking way into the future.
Exactly. They are basing it on estimates 2 full years out.
I mean, this feels like buying an empty plot of land today, not based on the value of the dirt, but on the absolute assumption that an entirely new, booming, futuristic metropolis will be built around it in 24 months.
That's a really good way to put it, yeah.
Are investors just hallucinating these valuations? How does looking 2 years down the road paper over the fact that they are hemorrhaging cash today?
What's fascinating here is that it shifts the investor's entire focus from current profitability to market capture.
Okay.
Bankers look around the market for comparable companies, or comps, that trade on similar promises of exponential growth rather than steady dividends. So the sources show they are benchmarking Anthropic against companies like Palantir.
Okay, Palantir.
Which currently trades at 53 times its expected revenue. And they also look at Cloudflare and SpaceX, which are trading at over 31 times their expected 2026 revenue.
Okay, but wait, I have to challenge that comparison. You just compared Anthropic to Palantir.
Right.
Palantir generates massive, reliable profits right now from these deeply entrenched government and defense contracts. They have a functioning, lucrative business model.
Yeah, they do, yeah.
Anthropic, on the other hand, is basically burning cash in a furnace to buy compute power. How is that a fair comparison for an investor trying to price an IPO?
Well, that is the exact friction point dividing analysts right now. The comparison isn't actually about the underlying business model. It's about the market's willingness to pay a premium for a very specific type of asset.
Oh, I see.
Yeah, Palantir is the benchmark for rapid growth combined with AI exposure. SpaceX is the benchmark for a company valued almost entirely on expectations for massive future infrastructure scale.
Which Anthropic definitely needs.
Right. Anthropic is forced to pitch this future scale because of their current reality. Right now, their margins are being absolutely crushed by the enormous costs of computing power, model training, and frankly, securing top-tier engineering talent.
Because building a synthetic brain from scratch is just incredibly expensive.
Astronomical. I mean, the fundamental dilemma here is growth versus margins. Anthropic is essentially asking investors to make a massive multi-billion-dollar bet.
Right.
They are saying, underwrite our cash burn today and trust that as we hit that $200 billion scale by 2028, our software revenue will finally outpace the massive infrastructure costs. They need the capital injection from the IPO just to survive long enough to see if their business model actually works at scale.
Wow. Okay, so if Anthropic represents the sheer margin-crushing cost of trying to build an AI brain from scratch, Apple shows us what happens when you have to retrofit that brain into a walled garden that already has 2 billion residents.
Oh, really?
And they have to do it under the watchful eye of the Chinese government.
Right, which is a totally different ballgame. The contrast in strategies here is so stark. You've got Anthropic, the classic startup scaling at all costs, just trying to invent a future monopoly.
Yeah.
And then you have Apple, the entrenched incumbent, playing a game of intense geopolitical pragmatism just to protect its present market share.
We really have to look closely at what is happening in China with Apple because they've been bleeding market share there.
Big time.
They've been losing serious ground to local rivals, especially Huawei, who have aggressively pushed AI-equipped handsets into the market. So Chinese consumers were actively bypassing iPhones because they lacked domestic generative AI features.
They wanted those localized features, and Apple didn't have them.
Exactly. Apple had to act, and what they've done is completely unprecedented for them. Instead of just trying to force their usual software in, they actually trained their own large language models specifically tailored for the Chinese market.
Right.
And they did it in direct collaboration with Alibaba Group,
which is huge. Apple usually insists on absolute unilateral control over its core software ecosystem. To partner with a major foreign conglomerate to train a model meant for Apple hardware, that signals a severe shift in their competitive environment.
Let's break down the mechanics of this integration, because in the US and Europe, Apple has been rolling out its Apple Intelligence by leaning heavily on Western third-party models.
Right, like OpenAI.
Yeah. You ask a complex question, and your phone just hands the query off to ChatGPT. But wait, US models like Claude and ChatGPT aren't available in China.
No, they're blocked.
And there is a widening trade and diplomatic rift between the US and China over AI in general. So how did Apple manage to cross this heavily guarded border? How does this system actually function under the hood?
Well, Apple developed a dual-track strategy. And honestly, this dual-track approach is just a brilliant piece of software engineering and regulatory maneuvering.
Okay, how does it work?
The first track is Apple's on-device model, powered by the iPhone's own neural engine. This handles all the localized basic tasks. So, summarizing a text message, adjusting a photo, organizing notifications.
The day-to-day stuff.
Exactly. It requires no internet connection and keeps the user's data strictly on the device.
Which protects Apple's core brand promise of privacy.
Yes. But the second track is where the heavy lifting happens. When a user in China asks Siri to generate, say, a complex creative story or answer a really nuanced historical question, the on-device model just isn't powerful enough.
Right.
Has to hand the query off to the cloud. And because US cloud models are totally inaccessible there, Apple routes those complex queries to Alibaba's Qwen model.
Wow.
Yeah, alongside some supplementary technology from Baidu.
Getting two massive tech conglomerates like Apple and Alibaba to match their software is hard enough. But the geopolitical regulatory hurdle is the real story here, isn't it?
Oh, absolutely.
Because the Cyberspace Administration of China, the CAC, they require all generative AI models offered to the public to go through a really rigorous registration and security assessment process.
Right, they have to test the models.
Yeah, they test them to ensure the outputs align with state regulations before they ever reach a consumer's phone.
And by utilizing Alibaba's infrastructure and Baidu's technology, Apple essentially rented the local expertise necessary to pass that assessment.
That's brilliant.
It is. The collaboration allowed Apple to navigate a labyrinth of regulatory hurdles that have totally blocked other Western tech firms. I mean, just last month, the CAC officially registered Apple's generative AI service.
Wait, really?
Yeah. making them the very first foreign company approved by Beijing to offer a proprietary AI model in China.
That is massive.
Yeah.
So if we compare these two battlefronts, you see two completely different philosophies of survival. Anthropic is fighting a war of raw intelligence against OpenAI and Google, demanding huge valuations to fund raw computing power. But Apple is fighting a war of localized ecosystem control against Huawei. For Apple, giving consumers in China a seamless, legally compliant AI experience is just infinitely more important than maintaining a unified global software architecture.
Exactly.
They prioritize regulatory compliance and market share over the geopolitical friction between the US and China.
They adapted to a hostile competitive environment by building a customized walled garden, specifically designed to fit within China's larger regulatory walled garden.
It's kind of a walled garden inside a walled garden.
It really is. It is a masterclass in market adaptation.
Yeah.
But, it also highlights the shared constraint plaguing both Apple and Anthropic.
And here's where it gets really interesting. This brings us to the physical reality of artificial intelligence. Because whether you are Anthropic projecting $200 billion in revenue to afford your compute costs, or you are Apple having to engineer highly efficient, localized models with Alibaba because you can't rely on a global cloud.
Right.
All of this points to the sheer thermodynamic cost of running these systems.
People forget that the cloud isn't some invisible, weightless entity floating in the sky.
No.
It is a sprawling, incredibly power-hungry industrial warehouse.
Yeah, people often use the transcontinental railroad analogy to describe AI infrastructure, but I don't even think that captures a reality of what is happening.
No, bigger than that.
Training a large language model isn't like laying down steel tracks. It's more like smelting aluminum. It requires such a continuous, massive draw of electrical power that you literally have to build the factory next to the power plant.
Exactly.
And that is exactly what NVIDIA and OpenAI are doing right now in Ohio.
Yeah, we are seeing capital allocation on a scale that rivals national infrastructure projects. NVIDIA is currently in talks to invest up to $3 billion in a SoftBank subsidiary called SB Energy.
Okay, SB Energy.
Yeah, and SB Energy's primary function right now is developing massive data center campuses.
Specifically, they are building a campus in Ohio designed to house OpenAI's models. And that $3 billion from NVIDIA is just the tip of the spear. This investment is part of a broader negotiation between NVIDIA, OpenAI, and SB Energy to provide roughly $100 billion in credit support for this planned campus.
Let's focus on that financial mechanism for a second, credit support.
Yeah, explain that.
NVIDIA isn't just handing over $100 billion in cash. They're using their massive corporate balance sheet to guarantee loans and provide credit facilities.
Okay.
This basically allows SB Energy to secure the necessary funding from traditional banks to actually pour the concrete, build the substations, and lay the high voltage lines.
It is so wild to think about a chip designer having to play investment banker for a power company.
It really is.
And the numbers in the source material show that this 100 billion figure is actually a revised number. Previous discussions had NVIDIA guaranteeing up to 120 billion, down from an initial figure of 250 billion.
Which is just an unbelievable amount of money.
So why is the company that makes the graphics processing unit suddenly acting as the guarantor for a Midwest construction project?
If we connect this to the bigger picture, it's because the physical limits of the electrical grid are the single biggest threat to NVIDIA's core business right now.
Oh, I see.
NVIDIA's entire multi-trillion-dollar valuation is based on selling highly advanced AI chips to companies like OpenAI, Anthropic, and Apple. But those chips require unprecedented amounts of electricity and, frankly, highly specialized liquid cooling systems.
Right.
If there are no data centers capable of powering and cooling those chips, OpenAI stops buying them.
So NVIDIA is basically vertically integrating out of necessity. They have to fund the power companies to ensure their own product actually has a place to plug in.
Exactly that. SB Energy is actually aiming for an IPO next month where they hope to raise at least another $5 billion from public markets. Their entire business model is the physical manifestation of the AI boom. The industry has realized that, you could write the most elegant, sophisticated software in the world, but if the local utility in Ohio can't handle a 500 megawatt draw,
your software is completely useless.
Yep, just an expensive paperweight.
Synthesizing these three massive maneuvers really changes the perspective on what the AI race actually entails for all of us watching it. It is not just a coding competition in Silicon Valley anymore.
No, not at all.
It is a multi-front, multidisciplinary war. First, you need the financial engineering to sell Wall Street on a future reality that doesn't even exist yet, which is what Anthropic is doing with its time machine valuation.
Right. Second, you need the diplomatic and engineering finesse to navigate really highly sensitive geopolitical landmines.
Yeah.
You have to adapt your product to local regulations just to protect your current revenue, which is exactly why Apple went through the grueling process of integrating Alibaba's models in China.
And finally, beneath the financial models and the software ecosystems, you need the raw, unprecedented capital to alter the physical world. You need companies like NVIDIA and OpenAI underwriting $100 billion projects just to secure the land, water, and electricity required to make the math happen.
It is a profound restructuring of global capital, technology, and physical infrastructure.
Huh.
But, looking at the sheer scale of the bets being placed here raises a really vital question about the future trajectory of this technology.
What are we missing in all this spending?
Well, we see Anthropic valuing itself on massive 2028 revenue projections to pay for compute. We see Apple spending heavily to build dual-track models. We see NVIDIA underwriting a $100 billion physical data center in Ohio today.
Right.
But what if the underlying architecture of artificial intelligence changes? What if a breakthrough in software efficiency, say, a shift toward highly capable small language models that run entirely on a smartphone, means we don't actually need all this exorbitant power?
Oh, wow. If the software suddenly gets vastly more efficient, the demand for massive server farms drops.
Exactly. If the models of tomorrow don't require sprawling gigawatt campuses, what happens to all this concrete?
Yeah.
Are we successfully building the foundational electrical and data grid of the 21st century? Or are we currently underwriting the most expensive, energy-intensive infrastructure bubble in history?
That's a tough pill to swallow.
Yeah.
It takes us right back to our starting point. Are we looking at a balance sheet grounded in the heavy physics of a new reality? Or are we just floating in the stratosphere waiting for gravity to turn back on?
It's the multi-trillion-dollar question.
It really is. It is something to closely monitor as we watch these tech giants lay down their tracks. Thank you for joining us on this deep dive into the source material. Keep questioning the world around you, and we'll catch you next time.